GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. Some interesting stuff going on this week.
What caught your eye the most?
Well, there's two things I think dominating people's minds today and this week. And first of all, of course, the stock market is still going up. It's the rally that started in February hasn't ended yet. It's not up huge today, but the fact that it's been several months since the low makes people so kind of thinking it's just kind of, this is what we're used to. We've kind of forgotten about the turmoil of January and last August, and everyone's used to the market going up. So Microsoft had good news last night, good earnings, and it's popped up quite a bit. And the thing is that what I like to emphasize to people is in this type of market environment, it's actually a very tricky one because the market isn't up huge. You know, we're not really taking off like we did in 2012 or 13 or, you know, 2003 or something where every stock is going up and there's these huge gains across the board. Instead, it's a cliche, and actually I'll make it so the cliche works a little better in a moment, but the cliche is it's a stock picker's market. In a certain sense that's true because today Microsoft is up, but we saw Netflix blow up this week. It got smashed for a 15% drop, and many stocks really aren't even doing that well. Today the Russell 2000 is lagging the other indices. The Dow isn't up as much as the S&P and the NASDAQ are. And this has really been a story since 2014 where it's fewer stocks that are really the ones leading the market, and that kind of changes from month to month what those stocks are. So to beat the market averages, you know, if you want to use the cliche, it's a stock picker's market. You got to be in the best stocks. And actually, the worst example of how this is so tricky for people is Apple has been a stock really since 2009, which became very popular with people. It became the most widely owned stock during this market since 2009. And yet that stock's done terrible for a year now. Exactly a year ago in July, it had a bad earnings report and then had subsequent about 3 bad earnings reports, and now it's a giant market laggard. In fact, at China, just today, there was a wild thing I saw in the news, and that was people in China are smashing iPhones in anger. Mass demonstrations against Apple, and the reason these people are demonstrating is they say that they're Chinese first, and they don't like the tensions with the United States and the South China Sea, and somehow they think Apple is, part of that somehow. But more important for Apple, though, is the Chinese government has blocked its iBooks application, it's blocked its iMovie application, citing trust regulation. So there's all kinds of things going with Apple to make it a kind of a stock that isn't what it was. And that's the truth of many stocks now. So today it's Microsoft that's hot, Netflix that was bad. And to try to beat the market, if you're going to play the popular stocks, means trying to figure out which one is going to do good going forward. And as I said, it's a tough game. An easier game, though, is to stick with the best sectors, because that's easier to identify, and then buy the best stocks in those sectors. So if you just look at the sectors, then there's a couple easy things you can see this year, and that is that biotech stocks and airline stocks, the sectors, have been among the worst in the entire stock market. That means you want to stay away from them. And the best sector has been mining stocks and gold stocks. That means that's what you want to focus on, is you want to beat the market and make more money than the market averages when they go up. Frankly, when they go down, the gold stocks seem to go up too. So that's my thinking, is everyone listening needs to get involved in that, even if they don't talk about it on the television set a lot. And this week, finally, we're seeing a bit of a pullback in the mining stocks. The price of gold in June rallied sharply up to around 1370, below 1400. It's now pulled back off that level. It could hit 1300 or even go below 1300. The real support level for gold at this point is 1285. That is its 50-day moving average, and the 1/3 retracement point from the January low to the recent high is 1,250, and those aren't that far away from where we are right now. So I think we're really seeing the bulk of the pullback, and you get pullbacks of 10, 15, sometimes even 20%, even in bull market. So that's what I think we got. And if you look at the HUI mining stock index, as we're speaking, it's trading around 254. The 50-day moving average is 234. That 50-day moving average in the first year of a bull market, which is what these things are in, tends to act as a great support level, a great buy point. And below that is 208 for the HUI, which is the 1/3 retracement level. I don't think it's going to fall that much. So 234 from here is only a 5% drop. I mean, I give these levels out. I can't predict, exactly what price something is going to bottom at. These things could bottom at today. The more important thing is this is what the sector's done. It's a bull market sector. It's pulled back. And if you want to buy stocks, look for the best stocks in that sector. And that's what I've been doing, and that's what I'm going to continue to do and continue advocating people do this year.
What has been the biggest disappointment for you this year?
Oh, I don't really, well, for me personally, and then I'll talk about the market, but for me personally, the biggest disappointment when it comes to my investing is I have been surprised by how much the stock market has been able to rally since February. I wasn't expecting it to make new highs on the S&P 500, although the Russell hasn't done that. Most stocks haven't. And I do, think it's eventually going to go back down, but that's definitely taken me by surprise. So I had a lot of short positions on New Year's, and I didn't take enough profits, in hindsight, but I don't really worry about that as far as more bad surprises. I really, the biggest surprise, actually, period, is what's been going on in the bond market, which I'm not long or short bonds at all, but it's been real shocking to see how low the 10-year Treasury bond in the United States has gone since the February low, really. And of course, we now have negative interest rates in many countries, and that's something that I don't think that's going to end. They may get even more negative, but in the long run, the stock market's the stock market. It's a game of a couple million people really trading it in and out or whatever. But in the long run, when we look back on this year in 10 years from now, I think the bond market will be the thing that shocks people. I mean, never before in history has there been negative interest rates for government debt, except now. So, that's pretty amazing.
What about China's plan right now? They're dumping U.S. treasuries and they plan to issue their own yuan-based bond. Would you buy it?
No, I'm not interested in buying that. The thing is, I really try to focus on no more than 5, let's say, asset classes or even sectors. Basically, large positions I'm really interested in. Right now, gold is one of them, and mining stocks is another one, and agriculture commodities are a third. So I really have, let's say, 2 things, 2 areas I'm looking to invest in, and I'm not sure what they are, but government debt in the Chinese thing isn't one that I'm just kind of waiting really for something better. I don't really want to invest in government debt in China. It's so crazy. When you do invest in trade there, it's crazy. I did in 2009. I bought a bunch of Chinese stocks because their market was real hot back then, and some of them went up really well, but it turned out that half of them were frauds. They were just making things up. It's just that's just really crazy. I mean, I'm real wary of investing over there.
Well, I saw a documentary where groups of investors were driven to a factory, shown around the place. 2 hours later, they changed the name of the factory and the names on all the doors and brought in another group of investors and sold the place all over again.
Oh, yeah, I can believe it. And, there's all these stories that really don't have anything to do with the stock market, but I hear stories from people in Canada about Chinese people buying up real estate, possibly doing strange embezzlement of money in their companies and weird things. And, I live out in the country in Southern Virginia, and I've heard stories of Chinese companies that are doing strange things even where I live. I don't want to go into detail, but things I wouldn't be able to do if I was running the company, because I'd be afraid, I'd get in trouble.
Well, shades of the 80s when the Japanese were doing the same thing, throwing huge amounts of money at virtually anything that moved or didn't move. Yeah.
I mean, I've never actually, I've heard stories of, I was too young in the 80s to know, but I mean, I've heard stories of people flying into the United States that are Chinese and, spending $20 million and just buying things, buying companies, buying real estate, don't even speak English, or they pretend they don't. They'll have a translator with them, and, and they do these things and no one knows who they really represent or what's behind them, or it's just kind of really crazy.
Well, we did have one story here of a Chinese billionaire buying a very nice house in West Vancouver, and then she bought up all the neighboring houses so that she could bring all of her friends over from Hong Kong and she wouldn't be lonely in her new place.
Why not? They can do it. But but the thing about the China situation as far as investing, it's not just like, is it a fraud, is it this or that when you buy something over there, but their market is still deep in a bear market, and I don't see any signs that it's turned around. So, the odds are before that's all over, they're going to devalue the yuan even more. So it could be, it's interesting to, one day buy there, but I don't think that's the time. Actually, I'll tell you where a situation I am watching as a possibility is Vietnam, because there's an ETF for Vietnam. It's actually priced fairly cheaply compared to other countries, and I think Vietnam is going to be a dynamic country in the coming years. There's actually factories that are leaving China and they're moving to Vietnam to hire people down there. So I think that's kind of might be the next country that will actually be a good investment for people to get involved in. That's in Asia. I'm still interested in investing in Russia at some point, but as I said, I'm just watching. I haven't put serious money into any of these things, but that's what you have to do. You have to kind of plan ahead and keep your eye out. And if you look at the gold stocks and gold, when you do get early in a bull market, the gains are tremendous. I mean, we're talking about a 10% pullback possibility here from the high, if it even happens, but they're up over 100% from the low of January, some of them up even more than that when it comes to especially the small cap stocks. But those are the opportunities that come, but you've got to keep your eye out and to be able to invest at a key pivot point, and it's easy to invest a little early too. But either way, you have to keep your eye out. So the thing is, everyone's always obsessed with S&P 500 and Apple and these stocks. That's all they talk about on CNBC, but there's so much more in the entire world, and you've got to keep your eye out on the charts. Not necessarily every hour, but look at these countries: China, Vietnam. What else might be interesting to you? Once a week, look at the valuations, keep up with the news, and that's I think it's funny. We got the online brokerages and all the information we can ever want on the internet, and it's just a matter of using it.
We'll have more with Mike Swanson right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, how does oil look for you right now?
Well, oil is one of these things, actually. Like, as I mentioned Vietnam, I'll mention oil is a situation I'm really watching too, to eventually put money into myself. I think it's early. I think it could be next year that the oil starts to really bottom out and we get a turn there in the oil cycle. But oil stocks, they topped out in 2014. And of course, last year they had a devastating drop. But the top came because Saudi Arabia, or one of the reasons it happened was Saudi Arabia accumulated a record short position in the commercial market, announced they wanted to devastate the American oil fracking industry, make them stop their operations, make them go bankrupt so they can maintain market share. And that was an operation that, the Saudi oil minister said this back in the fall of 2014. And that was something that wasn't going to take a year to play out, or even 2 years, probably 3. But in the commercial market, in the futures market, the commercials haven't really gotten down to the low point where they're almost net long or barely short. And that's still going to take probably the rest of the year for them to get there. They got there with gold before gold turned in January. They got there with many of the soft commodities. So, and also in a commodity bull market, typically gold and silver go up first, then other commodities follow, and then oil and the energy complex is last. And often they don't go up until a year to 3 years after gold does. So if we look at beyond gold and silver, we can see that there are some individual commodities that have now begun to move. Coffee has gone up this year, broken out of a stage 1 base. Copper has turned up. Nickel is turning up. So there are plenty of signs. I think there's other commodities that can be bought before oil. But what's so neat about oil is there's so many oil companies that do pay good dividends. But if you invest early, you can lose a lot of money, even if you are getting dividends. So that's what we saw in the mining stocks of gold in 2013, 2014. It wasn't time yet. A lot of them did fall. And I think that's what can still happen of the oil stuff. Even even if it's bottomed for good, it's probably likely to retest the lows set this year at least. So I think that could be something for next year. You know, I mentioned Vietnam, but really the oil thing is something I really would like to put a good 20% of my money into and get into oil stocks that are paying nice dividends as a long-term investment. But yeah, so that's why I keep my eye on it. But I think it's too early to do it yet, but the day will come.
Mike, thank you so much for chatting with us.
Thank you. It's great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.